Hello everyone, this is Kishore. Welcome back to my channel. Today I'd like to share my analysis on gold prices, like what factors are favoring the gold price to move higher and will it go higher from this current level price or not. This is not a financial advice, just knowledge purpose only. Let's jump to the show. So this is XAU USD gold spot price chart. It's a monthly chart. I shared my first video in April 2023 when it is at close to 1923. It break out and went up to 2700, which is my target, and rejected there. And in month of December, in the month of January, it bounced from here. And if you see in the weekly chart, it made a symmetrical triangle, and the symmetrical triangle break out in the upper side. So the symmetrical triangle target is right now $2,917. If it break out, then my next target is 3,300. So, but last 6 weeks, it's a green candles, it's going up like anything. So there may be high chance after hitting 2,900, little bit of downside and then pick up from there. And this is COT index. So it talks about the what is the short-term trend. So the short-term trend little bit bearish here. So that's the reason I'm saying it may hit 2,900 and then reject there, little bit come downside and then bounce from the current level. And the gold future curves, so it's on the x-axis you can see up to 70 months, and the y-axis you can see the what is the target price. So in 70 months the gold future curves are saying nearly 3,400 is the target, but the current price of the gold is not moved by the futures, it is moved by price itself. Why I'm saying like that? So this is a gold in comex walls, it is going parabolically high and also daily change. If you see here, most of the investors or the banks are storing the gold in walls. So buying gold or keeping gold at home is different, but buying gold and shipping to the vault and storing in the vault is a big thing. Means there are a lot of associated charges to it. So investors or banks are taking this kind of risk, means there's a high chance from this current level gold can go up. And this is steep borrowing cost for gold indicates tightness in the market. It talks about what is the cost borrowing cost to short the gold asset. So right now it is very high, so it's very tough to short the gold price at the current level. And the history of gold cycles. So looks like last 2 years it went up, so there is a chance it may go down from the current level. But if you see the history of the gold cycle, from 1970 it went up to the 1980, and then it went to the sideways or the downside up 20 years from 1980 to 2000, and then from the 2000 it went up again 10 years straight to the 2010, and from 2010 it went to the downside and the sideways, and again it broke out at the 2022. So the bullish cycle of the gold cycle is still very young, so it may further go up from here in the current price level. And the annual performance of the key commodities. So in 2023, gold is the second one, like it up more than 15%, and then in 2024, it up 26%. But there are a lot of other commodities went up like anything in from 2019 to 2024. When you compare the commodity with other investment assets like equities and bonds, commodities is in between equities and the bonds. Bonds are very lower, but equities went up like anything. So there is a huge gap between the equities and the commodities. So there is a chance commodities break this level and go up further. And what are the tailwind for the gold price to move here, or who are the buyers for the gold? So most of the thing is central banks. Central banks are buying like anything in last 3 years. In 2022, 2023, 2024, central banks bought huge tons of gold, physical gold, and most of them are like Poland, Turkey, India, China. These are the major central bank buyers in the year of 2024. Very few central banks are sold in year 2024, and this is increased investment in India and China offset the slowdown in Europe and the US. So on the y-axis, it's a year-over-year change, and the x-axis you can see the different countries. US and Europe year-over-year they sold the gold, but whereas India and China they bought a lot, like 30% and 20%, that offset the selling of US and Europe and Turkey. And gold demand at the record level for Q4 and full year. In general, when commodity prices goes up, demand goes down, but in this case even the prices goes up, the demand also going up parabolically. So you can clearly see here it's an hostile it's a us in the us billion US dollar. The demand is going up even in the Q4. And a surge of inflows into gold ETFs in second half year of the 2024 almost fully reversed the outflows from first half year. So we saw that central banks bought a lot, and also in this chart we can see gold ETFs means investors are buying gold, especially in the second half of the 2024. And This data shows like on what environment commodities are good. In the inflation, especially in the accelerating inflation and the high inflation environment, commodities the only asset do good. So at the current inflation level, we know that it's a little bit higher, and also it may chance to accelerate based on the core PCA and CPI data. So that's the reason commodity is doing good, and also gold is doing good. And this is Goldman Sachs forecast accuracy for key market moving indicator. If you clearly see here, the red triangle is the average since 2017, and the blue bars are the 2024 values. So core PC is above the average, and also core CP is the above average. So that's the reason inflation is still sticky and it is going up, and there is a high chance it go from the current levels. I will share some of the slides in the next few minutes. And this is a consumer electronics at risk. We know that Trump announced tariffs on China and Mexico, Canada. So 10% on the China may impact the consumer electronics at risk, because the consumer electronics comes from the China. So there is a tariff of 10% on it. So the price of the consumer electronics may go up from the current level. And this will turn 25% tariff on Canadian lumber nail the construction industry. Lot of lumber comes from the Canada to Texas and few more states, and the tariff of 25% may impact the lumber prices go up, and that may impact the new home construction or the any remodeling of the homes. And this is home builder spec inventory exploding in 2024. Already new home builders are having trouble to sell the homes at the current level, and the inventory is almost like a 2009 level. And the current price median home new home price is under the median existing home price, means new builders are giving the incentives or the price reductions on the selling their homes. Even though they are giving the incentives, the inventory is up. Now if lumber prices goes up, it's very tough for the new builders to reduce their prices, and it impacts their margin profits. And the top import partner of every US state. If you see here, Canada and Mexico, the major importers, and nearly 900 billion annually imports happen from the Canada and Mexico. And this is one simple small example how tariffs impact the consumer price. And it's a Canadian steel plant. They bought US auto parts factory bought the steel from the Canadian steel plant and taxed it by US government. And then US auto parts factory, they send that auto parts to the Canadian car assembly plant, and it is taxed by the Canadian. And they sell the cars in US and Canada, and both consumers in the US and Canada, they need to pay higher prices with the taxation of the US and Canada. So this impacts the inflation may go up with this all tariffs. And this is S&P 500 tech net profit margins was the rest of the market. If you see the net margins, only tech is doing good. They're given more than 20%. Remaining S&P 500, the net profit is just under 10%. With these tariffs, there may be high chance the margin profit may go down. And this is trade policy uncertainty surged after Trump elections. So after Trump election, Trump announced this tariffs. So it impacts it creates the uncertainty in the market. Whenever there is an uncertainty in the market or an economy, investors don't like it and they want to go to the safe asset like gold. And this is in 2018 and 2019 US China trade war tariffs. So every month there is some news on the tariffs, lot of uncertainty at the time also. That's the same thing investors are expecting, maybe the same thing happen now. That's the reason they're moving to the gold. And a world of debt. So now interest rates is having share of global debt of 34.55%. So huge debt, and also other countries are having the huge debt. So this is one of the reason the currency devaluation happening and a lot of printing is happening. That's the people are moving into the gold to buy as a safe asset. And how the US government generate revenue. So 50% of revenue comes from the tax, but Trump is saying individual tax cuts. If he cuts that 50% revenue goes down from the general US government. And right now, US federal government spending was a tax revenue. So already government spending is more than the tax. If tax cuts are happen, then there is a huge debt will go up in the US Fed. And this is Atlanta Fed wage growth tracker. So in 2025, right now, based on the Atlanta Fed, the wages are going down uh, in this 2025 year, based on this chart. And most of the Americans spend their money most of the time in housing. So we already seen that wages are going down, and they spend most of the money in the housing. And if you see here, people don't feel like buying homes. So right now it's like almost like 30 years, more than 30 years low, like it's under 40. So because of the higher interest rates or higher mortgage rates or higher home prices or the uncertainty in the market or the job growth or the wage growth. And this home purchases fell through at the highest December rate on record. Nearly 16.2% of pending home sales contracts are fell down in the month of December because of the uncertainty or because of the higher interest rate. So this is not a good sign for the home real estate market. And this US GDP growth forecasted to decline to 2.1% by 2026. So in 2025 and 2026, the projections are lower. So the GDP growth is going down based on this forecast. And how it impacts the stock market. So US GDP, 32% of the goods of the US GDP contribute 62% for the S&P 500 earnings, and 59% of the service of the US GDP contribution to 38% of the S&P 500. If US GDP goes down in either goods or services, that impacts S&P 500 earnings. And if you see here, S&P 500 margin expansion from year 2000 to 2019, it mostly 50%, almost 50% is helped by interest rate declines. But with the current inflation and the current environment, there's a very low chance interest rate decline, or there's a little bit of chance if inflation goes up, interest rate may go up. That impacts the S&P 500 margin. And if you see your earnings per share growth, so Max 7 is doing good, it's more than 50%, but S&P remaining Max 7, they are not doing good, they are under zero. So this is a rolling 2-year growth. So based on this chart, the growth or earning per share or growth is little bit bad on the non-tech S&P 500. So percentage of stocks outperformed the S&P 500 in the year 2023, 2024 very, very low, like just 27% in 2023 and 26% are outperformed the S&P 500. So looks like S&P, even the stock market is showing the good number in the top level, only Max 7 or technology stocks are doing good, remaining all a little bit underwater. And this magnificent 7 market cap suggests to 60% of US GDP in 2024. So this is a Buffett indicator. So he uses this indicator for to when to invest, and it is like 10% in 2014 and 24% in 2019, and now it is 60%. And if you see here Warren Buffett war chest, he's having high cash value in the third quarter of 2024. Right now, I do not have the what is the latest number, but he's doing lot of selling lot of things and keeping in the cash. And this is based on the Wall Street analyst. The average growth or average expectation of the S&P 500 is 12.3% returns in the year of 2025. We already seen that only Maxon is doing good compared to S&P 500 remaining 493 stocks, and this inflation or in the tariffs, there is a high chance the profits and earning per share can go down from the current levels. And this is from the Bank of America investment strategy, the macro market cycle. Right now, we're in the commodities, like in the recovery to boom. So, boom environment, commodities do really, really good. So, boom environment means rates are up, earning per share up. But based on the last few slides, there is a high chance earning per share can go down, rates can keep high, which means we may move from the boom environment to the stagflation or recession. So, in this stagflation or recession side, hard assets will do good like gold. And the USDX chart. So it's a weekly chart. So it break this 106 level and went up to the 110 and then rejected here. Even though if you see here the the USDX index is very strong, like it break this range for the last 1 year and went up. Even though in this current trend, the gold did really, really good. So looks like even though strong dollar is not impacting the gold price at all. And this is the COT index for the US dollar. In the short term, it is showing some kind of bearishness, means there's a chance of it can go further down like 102 or 101 level. And this is US dollar's divergence from fair value. This is from the Bank of America. Right now, the current USDX dollar value is way far from the fair value. So there is a high chance it can come down from the current level. It also acts as a tailwind to the gold price. And this is one chart like foreign exchange holdings in US dollar international monetary fund from 1996. In last 10 years, it's almost down by 30%. Means we may think central banks or foreign countries, they are selling the US dollar and buying the gold, or it may be some other reason they are selling it. But whatever the reasons, the 30% down in the in international monetary fund is not a good sign for the US dollar. And this is US dollar index from 1967 to 2015. So whenever it went up, spike up, there is some economic crisis happen and then it came down. So right now it is very good level at 100 level. But if something happens, any economic crisis or anything happen, that may further goes down. That helps the gold price to go up. As we know, strong dollar is not good for any commodities. Big dollar is favorable to the commodities. And the summary is, so right now the central bank purchases and saving the or storing the gold in the comex walls is a very, very good sign, bullish sign for the gold price. And also the gold cycle, bullish cycle, it just started. It's still hang, so it may go further up. And also uncertainty in the economy, or the tariffs, or the inflation, or the job growth, all favoring the investment may move from the risk asset to the safe asset like gold. And my current target for the gold is 3300. If it goes down 2700, actually a very very good support level. So that's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. If you like that, please subscribe. Please hit the bell icon so that you'll get notification when I upload a new video. Please share this content if any of your friend looking similar kind of content. Thanks so much. Bye bye.